Which way are we supposed to feel as investors? Did things fundamentally change overnight from where we were yesterday?
No, and a bounce probably isn't going to make the bottom here. Traders should probably be pretty cautious of this bounce. As you note, we often get them. But look, from past pandemics, we know that generally markets don't bottom until we see new case growth begin to peak out. By the way, that already happened in China, and those markets have really begun to improve over the course of the last month or so, but not here. I think longer-term investors are probably better served to focus on the duration of the decline rather than its depth. There may be more downside to come, but stocks are unlikely to remain down through, let's say, year end, barring a severe and prolonged recession, which isn't our base case.
Recession, there's that word. What do you think, Tom?
I think investors are really worried. In fact, if you look at the decline in stocks through yesterday, the move in the VIX, move in interest rates, we've priced 100% probability of a recession. So I think markets are bracing for something that if it doesn't happen in the real world, it sets up for a V-bounce.
Jeff, what would you be advising clients to do right now? Is this time to put some money to work and take advantage of the sell-off, or is it just too early to do that because, as you suggested, perhaps the bottom has not been put in yet?
Yeah, I think for traders, it may still be a little early. You want to see a bit more technical support than what we're seeing now. For longer-term investors, I think taking a look at your portfolio, there are areas that you might be underweight. I noted how China's actually been doing pretty well, and until, yesterday, it had actually been nearly back to where it started the year. Lots of stimulus in China. Falling oil prices, by the way, China's the world's biggest oil importer, actually helps them. So if you don't have any emerging markets in your portfolio, you may have an opportunity to add some here that may actually be diversifying you. On the downside, emerging markets have not been falling as much as the overall market and have actually been gaining more on the upside. So if you're looking for a place to add in this marketplace, that might be a place where a lot of investors are underweight that could serve them here.
Yeah, I've actually seen that. It does seem interesting that China's reached within 2% of its all-time highs. But if the U.S. is going to dip into recession and investors are pricing that in, I don't see how emerging markets can be unscathed. So to me, somehow market relative performance doesn't make sense. I think if investors want to understand whether stocks have bottomed, I think it ultimately comes down to, what happens to interest rates. But I think the leadership has to come from the S&P.
And if the leadership comes from the S&P, are there groups, are there names we should be watching? Are there levels you want to watch where when we hit there, that's time to put some money to work?
Well, a couple of things happened yesterday that I think are important to thinking about a bottoms coming. One was that only 7% of the industries in the S&P were up over a 3-month period. That's only happened 14 times in the last 40 years. The last time it happened in 2008, it was the structural bottom of that bear market. That was October '08. And from that point, a lot of groups began to outperform. So I think if we're, like as Jeff says, if this isn't the bottom, I think the structural bottom's now in place. And what you want to avoid are the groups that led us to that weakness, which is energy and financials. But I think a lot of groups like tech, healthcare, consumer staples, discretionary, they're actually buyable today.
What do you think about some of those groups, Jeff?
It's interesting. Energy and financials, though, might be the first to rebound. I know that seems crazy in this environment with the yield curve looking the way it does and oil prices crashing. But look, whatever led on the downside might lead on the recovery side as well, especially if we get a deal within OPEC. Remember, the Saudi Crown Prince is a very difficult person to forecast. He's flip-flopped on Khashoggi. A number of other things could flip-flop tomorrow. Who knows? And energy stocks could really lead a very sharp rebound. The yield curve as well. If the Fed cuts pretty aggressively, we start to see a steepening of the yield curve. You could look out later this year and see an environment where it actually is maybe beneficial for financials. So those two areas, having fallen so sharply, could actually rebound the sharpest as well. We're not recommending an overweight to them here, but I'd be cautious going to an underweight.
We're just about out of time, but Tom, I'm going to end with you, and let's talk just very quickly about rates here. We are seeing a slight rebound, at least off the lows, for the 10-year and the 30-year. What do we need to be watching here?
I think that's a big deal. I think Jeff Gundlach was making some points over the weekend that this looks like a potential reversal pattern taking place. And I think investors will take a lot of comfort if the 10-year puts a 1 in front of its rate again.